How's it going, traders? Today is 11th of September and I'm here to bring you another crypto market update. Now I'm sure a lot of you must not have been enjoying this price chop which has been happening for the past couple of days. The price is kind of seemingly going sideways, and also we do have clarity on the daily triangle formation, the daily price action triangle formation, which is apparently a descending triangle. We have rejections over here, rejection here, rejection here, and then another rejection candle right here, kind of confirming this entire resistance as a strong area of interest for the sellers. And sellers are constantly stepping up in as soon as the price is trying to have any kind of interaction to this entire trend line. Judging by the moving averages, the candles are still closing above the 21. However, we do have a little bit of bearish cross which is happening between the 21 and the 100 moving average. Now if today's candle closes below the 21 moving average, I do expect some kind of continuation to the downside, further downside, which is going to be somewhere near 9,400 to 9,500 zones. I do expect a retest of these levels in not so distant future. And for this entire triangle's resolution, we do have 1st of October as our apex. Let's see if this triangle breaks out before that. Anyway, I do have another thing to talk about today, which is kind of important to have a look at, which is going to be judging the price action on the weekly time frames. Now this entire triangle, consolidation triangle, I'm going to be taking the weekly candle closures as the support and resistance level for this formation, which is going to be looking like this. Now here comes the question: are we actually descending? Are we actually in a descending triangle? Because if you simply compare this entire price action to something which happened back in the November of 2015 all the way to May 2016, for 6 months almost, it was more or less an ascending triangle. Price consolidating above the 21 weekly moving average and kind of squeezing in between the support and resistance trend lines, unable to close above it or unable to close below this trend line. As soon as we had a closure above it, we had a good massive follow through breakout. However, a retest again to these levels, which is not really a point of discussion right now, although I just want to be looking at this entire formation and comparing it to this current situation, current market posture. Now if we are looking at the price action in terms of the candle closures on a weekly time frame, we have our apex all the way at February next year, which is a long time, which is definitely a long time. However, this can be pretty much the case as far as the price keeps on consolidating above the 21 weekly moving average and rejects any kind of price action below the 21 moving average. Basically closing, if the price keeps on closing the candles above the 21 moving average again and again and again, we can expect this formation to resolve itself somewhere around February next year, which can be the case. There's no denying. The number of days for this entire formation is going to be 252 days. That's a lot. That's a lot of time. That's more than 8 months, right? So price can simply be consolidating, and the price can easily get reaccumulated for the next 6 months, and eventually break to the upside at some point, right? So we do have similarities as to the previous price action. Now let's see what happens next. Now I do expect that the 21 weekly moving average is going to be a big support, and it is definitely going to have a lot of significance in terms of holding the price action. However, going on to the daily, we have the 200 moving average on somewhere near 8,000 regions, which is around 7,800 to 7,900 zones, kind of aligning with the CME gaps that we have. So if the price kind of closes below this support trend line, and if the price starts closing below 100 moving average once again, and breaking this structure, we can expect a major dip to the 200 daily moving average, which is likely to be bought back up, eventually closing a candle above the 21 weekly moving average. Could be the case. That's what me personally I am speculating on, and I simply cannot decide, or I simply cannot narrate what the price action is going to be looking like somewhere down the line. And however, I can simply base my analysis off of the possibilities which can just happen and play my edge. And which reminds me, this triangle can really be drawn in a lot of ways, considering all the bull traps and the bear traps, and it might be near the support again, and who knows what happens next. In these kind of confusing price action areas, we do look at the moving averages. We do put a lot of weight into the moving averages, and yeah, also the moving averages are always going to be above any kind of pattern formation. Well, Bitcoin taking a dump as I make this video right now. We are kind of losing the 100 moving average on the 4-hour time frame. This price action squeeze between 100 and 200 moving average on the 4-hour time frame is, well, probably getting resolved to the downside as I speak of it right now. Let's see how it goes like. Although we do have the stochastic RSI. No, this is not stochastic RSI. This is just the stochastic. Stochastic is aggressively pointed downwards, and the RSI is rejecting the moving average, kind of diverging away from it big time. So we do have a lot of momentum in this current downwards movement. I do think we can definitely come to test this support trend line in this current move. Breakage of this line would lead us to the 200 moving average on the daily time frame, which is at 7,900 zones. Let's see. Probably we'll be closing today's candle below the 200 moving average, which is not going to be looking good. Anyway, that's been it about today's market update, and I will catch you guys tomorrow. Thanks for watching.